So for this video, what I wanted to do is, instead of my traditional rate video where I break down some of the things that are going on in the market, I figured I would bring in two other YouTube realtor professionals, and we would talk a bit about some of the expected changes that we're going to have in on this, make some predictions based on that, and in good Canadian fashion, we're going to make a Tim Hortons bet out of this deal.
Ooh.
So we're going to try to figure out what rates will look like by the end of the year, and whoever's closest, that is the person, like that person's going to get coffee from good old Tim Hortons. And I think that's the most Canadian thing you can do.
Right? And to make it more Canadian, we have to have Tim Biebs in it.
Tim Biebs.
There we go. Yeah.
There you go. So there you go. That's the wager. So obviously we know that the Bank of Canada meets 8 times a year. I feel like most of the people watching this would also know that. This is the rate schedule for those that don't. So we're going to make some predictions as to what's going to happen on April 13th, because that's coming up, although I think there's already some consensus as to what that's going to look like. I also want some commentary on what June 1st is going to look like, because that's the next one. And then, like I said, our bet will be, though, on what the end of the year is going to look like, what kind of that long-term trajectory is. And of course, what's even more important than that is not just what's occurring, but what that result is going to be or is going to have on the market, right? What is those rate increases going to have to home affordability? What are those housing what are housing prices going to look like based on all of those details? So that's kind of where I want to start things off, right? Let's talk about the April 13th rate that's coming up. I think that most of us have the consensus that April 13th, the Bank of Canada is going to raise their interest rates by about 0.5%. Would you guys agree with that sentiment? Do you have different thoughts on that? Yeah.
My brain says yes, but then there's a part of me that says, do they go silly and do a quarter point? And I'm torn between that. And then, of course, the other half of me says, do I just go opposite just to say I'm opposite from you guys?
Right. That's fair. That's fair. You could do that. But I don't, like, from my perspective, I don't think they'll actually do the quarter point, only because the last time they did a quarter point when they should have done a half point was this past rate adjustment on March 2nd. And I'm going to actually show a graph. So this graph right here is the bond market. This is what's been happening over the last few weeks. You can see, like, it's absolutely skyrocketing. But what you'll notice is that little dip sometime in March. Well, that little dip right before it goes way, way up is the Bank of Canada rate announcement that says, hey, we're only raising it a quarter point. And the moment that they said we're only raising it a quarter point, the market went freaking nuts, right? Because they're like, that's not enough. That's not enough to handle inflation. And then the bond market reacted accordingly. So I think this time they're going to have to do that. So, I mean, I get what you're saying, because the Bank of Canada hasn't risen the interest rates in that capacity for like 20 years, right? Like it's like year 2000 that they did 0.5%. I think this might be the one case. That being said, what kind of impact is that going to have from your guys' perspective on housing prices? I could talk about mortgage affordability, but housing prices, what do you think that's going to look like?
I think you have to split it up and talk about those that are on fixed versus those that are on variable, because that's going to change who's looking at what. I mean, right now, fixed rates, what are they, 4.1 right now?
They're around 4% already, yeah.
That changes your stress test equation, because now you've got a stress test at 6%, whereas if you go variable, you stress test at 5.25%. So it's almost like the fixed rates are pushing people to look more at variable rates.
So is that going to affect housing prices in your market? We'll start with you, Matthew. Is that like, what is Regina going to look like with these rate changes?
I kind of break it out to 2 types of buyers. The guy that's buying a house, that is just buying a house for his family to live in, he's got a growing family, got another kid on the way, something like that. Is a 0.5 point bump going to make him decide not to buy a house? Probably not. Is that guy going to maybe change his price point? Yeah, he might do that. I mean, you still got to rate hold a lot of these guys anyways for 30, 60, 90 days, whatever it is. So that may not change their opinion if they find the right house within that rate hold. The investor market, that completely changes it, because now it changes your cash flow proposition.
I think for us in Calgary, I mean, it's we probably have 3 different types of buyers. We've got that same family moving up. I don't think that's going to change much. I mean, they might have to change what they're affording, but we've also had such an increase in equity in the last little bit. So they're going to look at it and go, yeah, we can still afford that, because now we have more equity that we can pull to the next property. First time buyers, that's going to push them possibly into a different type of property. So because we have price increases plus we have interest rate increases here. And so that's going to start changing just what those buyers new to the market can actually afford. And then the third buyer is actually people who are moving here, because that is happening a lot for us. It's not just investors that are buying up new builds or condos or whatever. There's a ton of people that are moving, like physically moving their families here from other areas of the country. And so for them, they also have a lot of equity, because they're pulling $500,000-$600,000 from their homes where they're at, coming here and trying to buy it, a house for cash. And even if they put $100,000 mortgage on it to bump it up to what they need to spend, then they'll do that. So
Matthew, are you seeing a lot of that? Like Jared is right, in Calgary, it's bonkers how many people are moving there. Are you seeing a lot of that too, as far as like migration from other provinces into Regina?
I think we're behind the curve, and that's typical. Edmonton, Calgary go first, and then Regina, Saskatoon, and Saskatoon will typically go before Regina. So we're behind the curve on that. Is it happening? Yes. Am I seeing people come in from out of other provinces to buy houses here? Yeah, absolutely. Is it as busy as Calgary? No, we're not that busy.
If all these people are coming in from these other provinces and they're bringing all this equity and stuff like that, there could be an argument that because of rising interest rates, you might even see more migration, because now you have to factor in, you have all these housing prices that are obviously still high. But then with rising interest rates, the payments are that much higher. So ergo, wouldn't you see more migration to these smaller centers? Because it's a higher interest rate, but because the mortgage balance is just so much less, it's therefore equally as affordable. Is that a thing?
I don't know.
Well, supported, I guess, is the better question. Yeah, if you can work remotely, sure.
Yeah.
If there's the economic opportunity, your job exists in Calgary or Regina. Yeah,
then do it. Yeah.
Yeah.
But I guess too, you also have to think like, if someone is, not everyone, it's not going to affect everybody right now. It's only people who are making a purchase or a refinance. So if someone refinanced last year, it's another 4 years for them, probably another 4 years for them to actually consider what the market's doing. They're laughing right now. They're looking at it going,
oh yeah,
I locked in at a 1.3 or whatever the number was. That was ridiculous because it went so low last year. And so even people trying to refinance for us in our city, because they're looking at it going, well, now there's equity. But the problem is you have all these appraisals that are looking at last year's numbers, not even last month's, and they can't even reappraise. So it's all of these things that are like delayed. And especially those people back then, they definitely, they don't care what's going on really.
Oh yeah. Well, even last year, we had locked people in, like a bunch of people in at 1.39.
Yeah.
Right. And the amount of people that are texting me right now going like, holy crap, we made the right call. Like, thanks. Yeah. Like it's nuts. And even if you look at the States, like a lot of mortgage loan officers, like more MLOs, they're just being fired left, right, and center right now. Like the layoffs are massive down in the States. Yeah. In our sector, like in my sector, because they're like, the refinance game is done. Like nobody's refinancing anymore.
Yeah.
And that's true in a lot of ways. Like no one's thinking, wow, I want to get rid of my 3% mortgage or my 2% mortgage and get a 4%. Like no one's going to do that. Right. So you're right. In a lot of senses, it's going to delay a lot of impacts for a majority of the Canadians, I would say. Right. So
by that time, we could easily be back at a 6%.
Yeah. Like, who knows? Well, I think in 5 years that it's 6 to 8.
Definitely. Yeah.
That wouldn't be unheard of as far as anyone's concerned. But and Matthews would laugh at this because he knows the reference here. But there are some people out there who will say that every 1% increase in the Bank of Canada interest rate brings the housing prices down 10%. That's
my favorite dumb rule that there's out there.
There's a relatively well-known
like
YouTuber
this thumb, like which thumb? I guess not. That's like that. Like I just can't see how interest rate changes affect prices. There's like, you have so many variables in a market that are pushing prices way quicker and harder than what an interest rate's going to do. Now, if you have drastic interest rate changes, that could change it. But a single percentage, it might take out some of those people that are, thinking I can, I'm on the edge already. And now I'm out where most people aren't, because it's such a conservative lending institution that we have. So it's different.
It's one of, like, interest rates is one of many factors. And even when I talk to people that are looking at buying, don't get focused in on just the interest rate. Sure, you can get a discounted interest rate and the mortgage is terrible for you. And so that's what I always tell people, don't focus on just that number. There's so much more to it. And there's so many reasons why you should and should not buy a house, and when is a good time and when is not. There's a multitude of factors, and interest rate is just one of a dozen or 2 dozen of them.
And I think you guys both made some good points there, because interest rates is only one factor. I mean, it's obviously an important factor, but you're right. You can get saddled with all sorts of shit behind the scenes in terms of a terrible mortgage if all you're paying attention to is rate, right? There's people who will give you a low rate just to screw you over on fees, penalties, and all sorts of other stuff. But 2, you're right. There's a lot more that affects the market than just interest rates. And what I find not funny, but humans have a very short-term memory. They're like, wow, what is a 1% change in the market going to do? Well, that happened in 2018, right? Like from 2017 to 2018, we saw a 1% increase. There was 4 quarter point changes in that time that drove it up 1%. And if you expand that, I think it's like 15 months, there was 1.25%, right? It was 1.25% that it changed. And the world didn't fall apart. We were just fine, right? And it didn't really change housing prices either. Yeah, 100%. Right. The stress test was way more important back then.
That was a much bigger deal than a 1 or 2%, even a 2% interest rate, right?
100%.
And of course, now there's stuff like that going on. I mean, Ontario is obviously bumping their foreign buyers tax. BC's looking at piddling around with some stuff. Nova Scotia is doing a foreign buyer tax, a one-time fee, and an increase in your property taxes if you are not from the province. Not from the province.
I hadn't heard that one.
Yeah, it's like a land transfer tax, basically, for anybody who's not moving to Nova Scotia.
So that's your anti-Ontario.
Basically, rule. Yes. And I think it's a 2% increase on your property taxes.
Wow. Wow.
Or an additional 2%, something like that. I know just looking through the details on it. Stuff like that has a way bigger impact on the market than
rate. And depending on what happens with the states too, you might have a lot of people who, are watching what's happening there. And what I find interesting is that I can't remember what the exact ratios were, but Americans' income to like mortgage balance is actually significant, or income to housing price rather, is actually quite substantially smaller than Canada's income to housing price. Like we love our houses. I don't know. It'll be interesting to see. I think some markets are going to feel it more than others. Like the Prairie provinces, I think are delayed as far as that the housing prices bump. Like even after Trudeau took election back in 2015 or 2016, whenever it was, housing prices started to take off then with the amount of money he was pouring into those provinces, right? And I think that's the reason. One of the main reasons is that, with all that extra money, it had to go somewhere. So why not real estate?
Well, even just with our house prices, because of what somebody's borrowing, I'll use myself an example. Every quarter point bump, and I'm on a variable, bumps my mortgage $500 a year. That's not going to change my lifestyle at all in any way, shape, or form.
Yeah, yours.
Yes.
Yeah.
So because, but versus somebody say in Toronto that's borrowed $1 million or 1.2, that's not $500 a year anymore. That could be $500 a month.
What I actually found blew my mind the most after this initial rate change is how many of the buyers reached out to me, right? And they're like, I was with my bank or I was with another broker, but we need some answers. We're not sure if our payment changes and we're in a variable rate. How many people reached out and did not know that? I'm like, you signed in these documents, like you're in a mortgage already, and you have no idea changes are going to affect your mortgage payment. I'm like, that is not a good sign.
You know what? That's probably good, like just to talk about that, because your payment may or may not change, and a lot of people don't understand. I was one of those people that phoned you and said, "Hey, clarify this for me." Because I had people phoning me and asking.
I wasn't going to put that in, man.
I'll wrap myself out.
Yeah, no, but it's true though, because there's static variable, which means that your payment, the interest rate changes, but your payments do not. So that means the portion of your payment that changes.
And that's what I was going to bring up. Yeah, because that's what we're personally on. And so for us, like our payment's not going to change until there's a bunch of changes to the interest rates, right? So for us over this last couple of years, when interest rates have been really low, I mean, we've been paying off principal like crazy. And so now that's just going to, slowly switch a little bit. Yeah.
See, I was like that, but then I saw the rates were low, so I was one of the guys who locked in. I'm like, yeah, we're never going to see these again in my lifetime. Lock it in.
Never say never, right?
Yeah.
Not many years ago when it was 4% interest rates, we went, oh my God, this is as low as it's ever going to be. You got to get your rates now because it'll never be better. Oops.
Well, here's where I'll wrap myself out. So here's one time, thankfully I'm not wrong a lot, but sometimes I am very wrong. And in this case, I remember seeing it was 2019, and there was an interest rate for like 2.6 or 2.7%. And I remember sitting the clients down and being like, you will never see an interest rate this low again in your lifetime. And then pandemic, I'm like, well, because what I had actually told them was, you'll never see this again unless something catastrophic happens to the world.
Yeah.
Right. And then there was a pandemic, and they called me like, you predicted the future. I'm like, no.
So this is your fault?
Yeah, this is your fault.
Yeah,
this is all your fault.
That's right.
Oh man.
That's my way around it. But I was like, yeah,
thanks for watching, everybody. We're done. We're done.
The world is over. Well, hopefully, this is the lowest rate. Ironically, hopefully this is the lowest rate that we'll see again in our lifetime, because there's only really one way that it will come down, and the answers are not good for most people.
Well, it is interesting because we have experienced what has caused a really extreme low interest rate. Like,
it's true.
Like that's something that, we probably wouldn't have thought of 3 or 4 or 5 years ago, that we would have experienced something like that.
100%. Right? Like I read a lot of history as far as like the economics policies of the world or whatever for like the last 100 years kind of thing. Like I find that stuff interesting, and there is nothing that you can compare this to in the last 100 years. It's actually nuts. Yeah. So watching these countries come up with solutions and do things that admittedly some you just look at and you're like, that makes no sense. It's so stupid. And then others you're like, oh, that looks like a good idea. But fast forward 5-10 years, I guess we're really going to figure out who was right and who was wrong based on all these policies. But it's impossible to tell.
Well, I think to go back to what you said about we have short-term memory. I mean, there's definitely is, we do, but we also over the last 2 years all experienced something that was so different. And so even though for some it might have gone fast, some might have gone slow, like time might have stopped, time might have sped up, like it just and actually all of it at the same time. Right?
Yeah, that's right.
And so like I look back the last 2 years, I'm like, how did this all, like what happened? And so we just got used to seeing these kind of rates mixed with all these emotions. And now it's like, okay, well, like we hear over here that we're coming out of it. We hear over here that we're not. And banks are doing like, it's like, what? And we're all just super sensitive to everything because we've had to live in a super sensitive environment.
It's true.
So it's just interesting. Like, I mean, they have to raise the interest rates. They have to. There's just no way around it. If they don't,
they're gonna. And that's, I think, like a whole different conversation there too, because a lot of people they can't raise interest rates. It's going to hurt too many Canadians. And ironically, if they don't raise interest rates, it's going to hurt even more, right? Like it's going to hurt even more Canadians, right? Because if the Americans raise their interest rate, but Canadians don't, then you end up in a situation where the Canadian dollar gets stronger than the American dollar, which hurts our exports, which hurts Canadian employment. And then, so that really can have a strong effect.
Okay, so if that happens, who wants to go in on a condo in Maui? Anybody?
That's right. Yeah.
Okay,
yeah.
done.
Let's
do it.
Because why not, right?
That's why not.
A couple weeks ago, loved it. Definitely want to go back. So buy condo, no problem.
There you go. But so I mean, I think there's a consensus that in April 13th, there's going to be a rate change, and it's probably going to be about 0.5%. I mean, Matthew is saying 1/4 point. No, I'm just kidding. Matthew's probably saying 0.5%. But
that's what my brain
June
says.
1st, though. June 1st. Are they going to follow it up with a second rate increase? Or are they going to basically sit and wait? I mean, obviously, even June 1st is so far away as far as like being able to know what's going to happen based on how people are going to react to 50 basis points. Because sometimes you make a prediction and people react even bigger and more extreme than you thought they would. But June 1st, let's start with you, Jared. What do you think is going to happen June 1st? Are they going to do something, or are they going to?
Are we just talking June 1st? Are we going to go through every date, or
no? Not every date. April 13th, June 1st, and then we're going to talk about what our prediction is for the end of the year. Because at that point, you have educated guesses, but they're no more than that.
Yeah. So I think there still would be something.
You still think a rate increase? Do you think they'll mimic the 50 basis point bump because they've already done it? So why not? Or do you think it'll be a quarter?
I think it'll be a quarter.
Yeah. Okay. What do you think, Matthew?
Yeah, I'm the same quarter point.
Okay, I'm gonna go extreme. I'm gonna think it's gonna be back-to-back 50s. That's my extreme. And I know, Jared, you don't think so.
You are cut out of the condo for now. You're out.
I do. I think we're going to see a 25, a 50, a 50, and then I think we'll see it, let it ride for at least a little while. I think there's a lot of strong momentum as far as inflation is concerned, and I actually don't think they know how they're going to reel it in yet. What do you think the interest rates will be at the end of the year? So give me what the Bank of Canada will be at by the end of the year. We'll see whoever's closest to that will be the winner.
So we are at what right now? Let's just set the baseline.
50 basis points. That's good for people who are watching. That's correct. We're at 50 basis points right now because we were at 0.25. It went up a quarter point. It's now at 0.4 or 0.5%.
0.5. So we are saying pretty much we're going to be at 1 as of April
13th, correct?
And some of us are saying majority. Let's use that word. Majority of us are saying 1.25.
That's right.
And the minority is saying 1.5.
That's right.
And so by the end of the year, I think it'll be around 1.75, maybe 2.
And Matt, what do you think?
I think they're going to go till they break something. I think we're going to see.
Yeah,
that's fair. I like your answer. Yeah.
It's going to be increases, and like they typically do, I think they're going to overshoot and come back.
Yeah.
And I wouldn't be surprised if near the end of the year, if interest rates aren't dramatically different than they are today, because I could see them overshooting it, creating an economic problem, and going, oh crap, we got to bring it back.
So Matthew's at 7%.
So it wouldn't surprise me to see it get up to 1.5, 1.75, and then oops, we broke it, and now rates are going down.
Go back.
And whether that's at the end of this year or early 2023, okay, now I'm stretching the timelines and probably breaking the rules here, but I think they're going to overshoot on interest rate increases.
So December 31st, what's the interest rate? That's what we'll say. That'll be the cutoff.
I'm going to say end of the year, it's 1.25.
So 1.25?
Yeah.
And you're saying, Jared, you're saying 1.75, which is interesting.
I think
that was my number.
I think they're gonna. I think they need to push it further, and they're not going to pull back too quickly. I think it's going to be a big push, and then probably a bunch of little ones just to kind of slowly ease into something.
I like the break thing though. That's funny.
But yeah. But I don't think 1.75 is going to break anything.
I don't think so either, especially since we've been there recently, right? Like 3
like just before the pandemic.
But you know what?
Broke first, us or the government?
It's true though. The government does have a lot at stake on that, so they will feel it. Okay, so December 31st. To be clear, you're saying 1.25, Matthew.
Yep.
Jared, you're saying 1.75.
Yeah.
And I'm also saying 1.75. So in the case that we're both,
I'll go to 2. I'll break everything.
Well,
I'll go to 2.
I was going to say we could use the tiebreaker as June 1st. Whoever was more right on that in the event that we're correct, right?
I like it.
Because you're saying a quarter point June 1st, and I'm saying 50 basis points June 1st.
Okay.
So we'll know June 1st if I'm in trouble or not.
That's right.
for this bet. But I think those are good rate projections.